Hello everyone. Today we are going to discuss another penny stock named Shekhawati Poly Unlimited. So this stock is in the business of textile, and the company is having a presence in domestic as well as international market. Company is a manufacturer as well as a job worker. So they are having various knitted yarns, fabric, and industrial cloths for manufacturing fancy yarns for high dress material and hosieries. Also, the company is having export presence in Israel, Argentina, Morocco, Brazil, Mexico, Indonesia, Vietnam, Poland, Colombia, etc. There is one thing which I want to make you remind of, that the company is having severely affected because of lack of working capital, and that is the reason why the company has been defaulted or treated as NPA by the bank in March FY21. And also that is the reason why the company sales because the company is totally dependent on job work, because they are not having less working capital. So the company does not do any manufacturing, and they are outsourcing every business to the job work. And so then the company purely becomes a trading company, and that is the reason why they are having a negative operating margins, not profitability, but their EBITDA also becomes negative, and that is the reason why the company has more than 90% of sales from job work. And this results in the company becoming uh, this makes the company net worth to be negative. Now the company has is in the turnaround phase, and company trying to survive, and company has shown a market cap of 112 crores, looking to the current price, which is around 323.25 rupees per share. A book stock P is around 9.93, which is in line with, I would say, which is good, better than their peers are having around 22, and the stock is having 9 P, so it shows that the stock is undervalued. Looking to the ROCE, so ROCE is around 32.5%. If we look at the price pattern of last 1 year, so company has shown momentum from less than a rupee to now, with trading around 3.19 rupees per share, which shows that the company is one of the companies, and that is the reason why the company is in last, I would say, 4 or 5 years, the company is flat. But starting from the Jan and onwards, this current calendar year of of 24, where companies shown the momentum, and the price has moved up to more than 300%. And that is the reason why it has been in the eyes of investors, or in particular the retail investors. So looking to the quarterly results, so obviously they have shown a good quarterly results in terms of sales, because they are in job work and they are outsourcing every of their business, and that is why their EBITDA is negating. So that is not a good sign in a company like this, which is having no working capital or nothing. But in March 24 quarter, the company has improved its performance, and now the first time in last 10 quarters, the company has become EBITDA positive of 38%, which is a turnaround case. So in this case, in this quarter also, company is having 138 crores of exceptional gains. That is the reason I think that they have sold their fixed assets, and that is the reason, that is one of the reason why the operating income has 138 crores of, I think that is a capital gain. But we have to, you can see that what are the reasons why they are having 138 crores of other income. That is exceptional item. Apart from it, but that would not be considered. Mainly we should look on the operating profit margin, and operating profit margin is 9 crore, which shows the company becomes profitable in operating margin for the first time in last 10 quarters. So if we look at the sales numbers, so sales numbers are obviously because they have shown various job works, and that is the reason why the sales has ballooned up, and it shows around 163 crores, then 360, then 302 crores. But the material cost, if we see, because they are doing job work, so the entire finished materials are being procured by the company. The company purchase the entire finished products and do minimum manufacturing, and that is the reason why the manufacturing cost has material cost has been significantly, where raw material cost has been around 223 crores in, but in present case the raw material cost is around, I would say, 19 crores. Looking to the manufacturing cost, the manufacturing cost is around 37%, because the company is now doing manufacturing by themselves. In current year, the manufacturing cost has been increased, which shows a good sign and good signal that a company is focusing on manufacturing as well. And the employee cost is around 7.79%, other cost is around 7. So the operating profit for the first time has become 16 crore in last 10 last 8 to 10 years, I would say from March 16, the company has been operationally negative. But if we look at in last 8 or 9 years, the company has been first time posted their profit, and their operating profit margin is highest at the 21% range, and that is the reason why the profitability of the company has seen soared up. And looking to the sales growth, so sales growth are not good because of the company has been in a hostile phase, and the company has crisis of working capital. But in last 3 years of data, company has shown a sales growth of 39%. Similarly, the profit growth has been soared from 44%. Looking to the every other data, so in last 10 years of time, company has shown a investors return of 4%, in 5 years 66%, in 3 years 61%, but in 1 year it has shown around 5 times of what it was priced of a year ago. That is why it is in the eye of the retail investors. And the equity, if you look at the equity capital, so equity capital is around 34 crores, and the company is having 34 crores shares at the rate face value of 1. So if you look at the short-term borrowing, so the company has reduced all their short-term borrowings, and company is now a debt-free in terms of short-term borrowings, and around 7 crores of borrowings the company is having. That is not a big issue for a company because of they are now, and it is the first time the company became positive net worth, because a year prior to this, the company is having around 150 crores of negative net worth. But in present year, the company is having a positive net worth of around 7 crores. That is also a plus point for the company. Looking to the trade payables, so the trade payables has been, if we look at the trade payables, so the previous to this, the company is totally job work. The company is having a totally job work portfolio, and that is the reason why the trade payables is around 51 crore rupees. But and that would be that would shows that the company is that would be good. But if you look at the current year trade payable, so it seems that the trade payable has been reduced to 50 crores, but it is not the case, because the company's manufacturing cost has been increased. On the other hand, the raw material cost has been decreased, because if the raw material cost has decreased, it means that the trade payables is obviously been decreasing. So the reduction in trade payables is not because of their sales, but it is because of not because of their initiative to reduce their trade payables, but it is because their company is having less borrowings, or the company is having less sourcing from the suppliers, and that is the reason why they are having less trade payables. It does don't misunderstood that the company has a company wants to reduce their trade payables substantially, and that is why it has reduced from 51 crores to 15 crores. If you look at the profitability numbers, so you can easily understood that in expenses column, previous year the material cost is 83%. So the majority of the of company is being trade payables, because they are the suppliers. In the present year, the suppliers are only around of 61 crores, the suppliers are only around 15 crores. On the other hand, they are around 83.53 crores, and if we look at their numbers, so the numbers are around 223 crores, and now it is 19.73 crores. So of 223 crores, company is having a trade payables of around 51 crores. It shows that company is still paying 200 crores by themselves. But in present year, the company is having 19 crores of trade pay, raw material purchase, and company has outstanding of around I would say 15 crores. It shows that the company is only pay off their 4 crores of trade payables out of 19 crore purchases. It means that company is having a lagging period, or the payment period, of around 300 days to their suppliers, which brings to attention that the company is effectively utilizing their trade payables, and company is financing their working capital from trade payables as well. And that helps the company to do not take loans, and that is the reason why the company is having no interest payments, 0 0 0 0 0. It shows that the company is deleveraging themselves from interest payments and any loans, and company is financing themselves through the trade payables only. Looking to the fixed assets, so the company is having fixed assets of 71 crores. Now it has been sold to 2 crores, and that is because of the land and building. Company has sold off their building and plant and machinery, and I think that is the reason why the profitability has shown an exceptional gain of 140 crores around. Looking to the inventory, so the company has an inventory of 1 crore rupees, which was the same as it was a year ago, and that would not be an issue. But the trade payables has been reduced substantially. It means the company has received their collective received from their receivables, and I think that would be a good signal for a company like this. Looking to the cash equivalent, so company is having a cash of around 35 lakh rupees, and that is also a good thing because company do not have any financial liabilities in terms of commitments like interest payments, so that would not be an issue. 35 lakh is a good number with a company like this having a market cap of 100 crores. So looking to the profit from operation, obviously the company has recovered from their receivables, and the payables are around 36 crores. That are totally a job work, or I would say their payables has been reduced to 36 crores. But other working capital items with a positive receipt of 26 crores, which take down their cash from operating activity to all time one of the all time high in last 10 years to 12 crores. Looking to the investing activity, so the company is having a fixed asset sold of 60 crore rupees, which shows that the company. It brings to the one of the most important point which I want you to understand. Just see, the company is not having, it means the exceptional item of 143 crores are still susceptible because the company is showing only fixed asset source of 60 crore, but they are showing the 140 crores of their unexceptional or exceptional items. It means if that is from fixed asset source, that shows over here, and the amount goes to 200 crore, but the amount is only 60 crores. It means that exceptional item is not from the fixed asset source. And this is how you should interpret the financial statements of the company, without going even if you are just looking to the financial statements only. You can also get it from the management content and discussion analysis as well, but by reading financial statements you can get to know many insights. So it means that exceptional items is still not from their core business, and that is not something to be noticed as a profitability. That can happen in a while for 5 or 10 years, so that is not considered as a profit, or a matter for investing in any stock or something. So looking to the cash from financing activities, so company has repaid their borrowings to the 60 crores, and that is result in the negative 61 crores of net cash flow. That is a good sign. Looking to the data days, the data days are around 57 because the company is having uh, obviously the debtors has been reduced, and the debtor day has been, and the turnover has been reduced as well. So the kind of debtors reduction is not in proportion to what the sales has been reduced, and that is the reason why the debtors days has been increased, and inventory days as well has increased. But days payable are sufficient enough to manage these cash conversion cycle, because the days payables are around 2279 days, and that brings down to the cash conversion cycles to 2 minus 202 days. But the actual working capital days which we have to look upon is 29 days. So the company's working capital has been tied up with the company for around a month, which is decent enough. Not, and I would say that is a good thing for a company like this. Looking to the promoters number, so the promoters have consistently increased their holding from 5749 to 5752, a slight improvement or slight increment, I would say, but that shows the confidence of the investors in the company. Looking to the public shareholders, so the two public, Azora Project Limited has invested in various companies as well. MX Internet Private Limited also one of the investor, and they have substantially invested. They are substantial investor, and I would say they are strategic investors as well, because they have retained their shareholdings and not even diluted a penny stock share of them in last 4 or 5 years of time. This shows that they are heavily invested in the company, and not only for the capital, not only for the profit booking, or I would say a few profit booking, or I would say capital gains in a short term of time of. And also, if we look at the around 10% or 11% is being held by I would say strategic investors, and the promoters are having 57%. So around 70% is being held by the strategic investors, and remaining 30% is held by public. And looking to the public participation, so the public participation in initial term, it has been reduced from 11,000 to 10,000, and they are consistently in reduction mode. But in last I would say 6 months of time, they has started increasing from 10,721 to 11,474 and 12,833. So highest number of shareholders till now the company is having is 12,833, which shows that the investors are, retail investors in particular, are showing their interest in the company. And because as we all have seen the kind of momentum the company has get in last 5 years, last 1 years of time, nearly around 4 to 5 times, which obviously attract anyone to get invested in this stock. However, the stock is in their turnaround phase, and stock has some pros and some cons, which we have discussed accordingly. Like their market cap is around 100 crores, the current pricing is around 3.25 crores, stock P is around. So there are various things which we must read and understand, and only after that we take an insight that whether we have to look into this stock or not. So took that stock into your watch list, and see what are their financial statements in the next quarter, and accordingly that you see that whether the company is growing or not, and on such basis you make your decision whether this stock is good and feasible to invest or not. So I would say this is not a portfolio services. I'm not providing any portfolio services. I'm not giving any insights, or I'm not giving any opinion that you should invest in this stocks or not. This is purely an educational content and an educational video, where the sole purpose is to make you how to read their basic financial statements of a company and financial literacy to the retail investors. And I would say consult your financial advisor before investing into stock markets. And this is how I conclude my video. I hope you all enjoy this video. Thanks for watching.